Thanks for tuning in. I just wanted to have a follow-up video to my last one about if we actually are going into recession. Normally the next question that I get is, okay, what should I do with my investment? Should I stay the course? Maybe perhaps like my advisor's telling me to do so, or should I change? And I always hear the question, should I invest in gold? And is gold a good place to invest in? And the short answer is, it's probably not what you think it is. And so let me go back and do a little bit of history on gold and why people always bring up gold as one of those options during a recession. And it has to deal with the fact that we used to have a gold standard. So our monetary values and system was based off of gold. So when we had paper money floating around, we actually had the physical gold bars in Fort Knox to be able to back up the paper that was floating around out in the actual markets. And so after 1971, when we went off the gold standard, things changed significantly for the gold markets. So prior to 1971, it was a completely different ballgame, which I'm not going to get into because that was history. But moving forward from 1971 moving forward, why don't we talk about the last 5 recessions? The most recent recession would have been for the coronavirus, and then 2008 recession. Before that was 2001, and then we have 1991, and then the last one that we'll talk about is 1981 during those recession times. And we'll just look at the chart to say, how did gold fare, and was it bang for your buck, or is it something that just kind of sputtered and did nothing? Let's look at the graphs. Last 5 recessions, gold didn't really make out like people thought it should. And when you take in consideration the time value of money and holding something, if you actually bought gold bars, these things are illiquid. So if you said, I need to take that gold bar down to buy groceries, well, you can't exchange it properly for the items that we're trying to purchase. But if you bought it from a gold broker, more than likely you paid full price for whatever it is that you were purchasing, whether it's gold, silver, or some other type of precious metal. When you actually want to try and sell it, a lot of times you go back to that same gold broker and say, well, this is what the price is valued at, give me full price. And they'll say, no, sorry, because I have to take that and hang on to it, and it's going to be on my shelf for a long period of time before I'm able to liquidate it. And so you don't get full price when you sell it for most people, unless if they really shop around and do their homework. I mean, chances of making what that actual price is very difficult to do. So with that said, gold has not fared out during the last 5 recessions nearly as well as what people would have imagined, especially when they're thinking about historically speaking when we were on the gold standard. So in my eyes, gold is just another asset category that should be treated as such. There's times when obviously you could make some money and it's worth your while to be in it, but there's obviously times when you say it's been extremely flat and hasn't done anything, or has actually been negative. So would you put all your money into it as a safe haven? Absolutely not. Is there a possibility to put it there and preserve and protect? That's always an option, but again, for the novice investor, more likely than not, you're probably better served continue to do dollar cost averaging and continue to be in the market. There's other investments that might have better potential. Hope this video helped. Catch me on the next one.